With the week nearing its end, we know that the BRICS summit is due to be hosted in South Africa next week, with the leaders of the group anticipated to discuss the creation of a common currency backed by commodities and or gold. On the monetary front, we note the release from Australia of RBA's minutes for the August meeting during Tuesday, New Zealand's interest rate decision from RBNZ, and the Fed's meeting minutes on Wednesday. And we continue with Norway's Norges Bank's interest rate decision on Thursday in the European session. As for financial releases, we make a start on Tuesday with Japan's GDP rate and Australia's wage price index, both for Q2, followed by China's industrial output, Japan's chain store sales, both for July, UK's employment data for June, Sweden's CPI rates for July, Germany's CEF indicators for August, the US retail sales growth rate and Canada's CPI rates, both for the July. And on Wednesday, we note the release of UK CPI rates for July, the Eurozone's revised GDP estimate for Q2, and industrial production rate for June, followed by Canada's wholesale trade rate for June and the US industrial production rate for July. On Thursday, we make a start with Japan's machine orders growth rate for June and trade balance figure for July, Australia's employment data for July, and later on during the day, the US weekly initial jobless claims figure and the US Fed business index figure for August. Last, on easygoing Friday, we note Japan's CPI rates and UK's retail sales rate, both for the month of July, followed by Eurozone's final HRCP rate for the same month and Canada's producer prices rate for July. The USD continued its upward trajectory against its counterparts for a fourth week in a row, despite a lower than expected CPI print on Thursday. On a fundamental level, we highlight that 2 weeks are remaining before the first Republican presidential debate, which could have some political interest. Furthermore, Moody's credit rating agency downgraded a number of mid-sized banks late Monday and warned that it may also downgrade some of the larger US banks. On a monetary level, we highlight that numerous Fed policymakers made statements throughout the week with no clear consensus as to how the Fed may proceed. Fed policymakers seem to be contradicting each other, with some implying that the Fed may be nearing its peak rate, while others implied or stated that more rate hikes are required. Thus, traders may be interested in the release of the Fed's July meeting minutes next Wednesday, which could shed more light into the Fed's intentions. On a macroeconomic level, we highlight that last Friday's employment data appeared to be mixed, with the non-farm payrolls figure coming in lower than expected, whilst the unemployment rate declined, thus potentially indicating that despite the resilient labor market, support may be fading away. Lastly, the US CPI rates released on Thursday accelerated less than expected, thus potentially weakening the case for the Fed to be willingly to continue hiking interest rates. The pound seems about to end the week lower against the US dollar and euro, yet higher than the JPY. On a monetary level, BOE's Pill stated during a Q&A session on Monday that inflation from food prices may still remain high for the foreseeable future. The statements indicated that food inflation could potentially skew inflation data to the upside, thus generating two scenarios where the BOE may be closer to the terminal rate if food inflation data is excluded, or where the BOE may have to maintain a higher level of interest rates in order to combat inflationary pressures for the long run. On a macroeconomic level, the GDP rates released earlier today showed an acceleration, yet are still at low levels. The growth of the GDP rates for Q2 and June, despite providing some comfort, are still worryingly low, as BOE's high interest rates appear to be strangling the economy, yet inflation still remains far too high. That brings us to the issue mentioned earlier, and a moral question might be raised to the BOE, in which they may have to consider forcing the UK economy to potentially enter a recession in order to curb inflation, or to remain at current levels and try to tackle inflation over a prolonged period of time, yet such a scenario may keep economic growth at anemic levels. JPY is about to end the week lower against the US dollar, the euro and the pound, in a sign of a wider weakness. On a fundamental level, we know the continued elevated tensions between Japan and China over the issue of Taiwan, which could awaken JPY's safe haven status should the issue intensify market worries. On a monetary level, we note the release of BOJ's summary of opinions for the July meeting, in which it was stated that the bank needs to patiently continue with monetary easing toward achieving the price stability target, implying that there might not be any plans currently to switch from the bank's ultra-loose monetary policy, thus in our opinion prolonging the inevitable rate hike by as much as possible. Yet the weakening of JPY caused by BOJ's dovish stance may force the bank to intervene in the markets, coming to JPY's rescue. On a macroeconomic level, we highlight the acceleration of the household spending rate, implying that the Japanese households have actually increased their spending on the month-to-month basis and sending a positive signal about consumption. Furthermore, Japan's current account figure, which was released on Tuesday for the month of June, was indicative of a resilient Japanese economy in spite of mounting pressures from high interest rate levels from overseas central banks. Lastly, we highlight the release of Japan's preliminary GDP rate for Q2 on Tuesday. And lastly, the CPI rates for July are due to be released on Friday, shedding more light on the direction of inflationary pressures in the Japanese economy. The euro is about to end the week in the greens against JPY and seems to be losing some ground against the greenback. On a fundamental level, we highlight the possibility of a continued deterioration in EU-China relationships, with Germany also fearing the economy may be further weakened by continued actions against China due to their wide trading relationship. On the monetary front, an ECB report stated that the bank anticipates that inflation will continue to decline but will remain too high for too long, potentially indicating that the ECB may have some way to go with interest rates before inflation is brought down to an acceptable level. However, there is a risk that the ECB recognizes, as it also stated, that the short-term economic outlook for the euro area has deteriorated due to the weak domestic demand. Hence, it remains to be seen whether the bank will be hiking rates in the September meeting or not, a scenario that is currently possible, and if not, then the bank may hike rates in the late October meeting as the market currently expects. Lastly, we highlight the EU's revised GDP figure for Q2 and the industrial production rate, which are both due next Wednesday, with the Eurozone final HICP rate, which is due on Friday. AUD is about to end the week lower against the US dollar. On a fundamental level, we note that Australian LNG producers are scrambling to reach a deal with unions on Thursday in an attempt to avert a potential strike that could possibly disrupt 10% of the world's liquefied natural gas supply. On a monetary level, we note the statements by outgoing RBA Governor Lowe, who remained hawkish, stating that it's too early to declare victory on CPI, and further interest rates increases are possible if the rise of earnings income continues to accelerate or spikes, especially for services. Furthermore, traders may be interested in the release of RBA's August meeting minutes next Tuesday, which could shed more light to the thought and the process behind RBA's decision to hike yet once again, despite the faltering economic data. On a macroeconomic level, we note the lack of financial releases from Australia, yet China's worsening trade data, in particular the reduction of imports by approximately 12.4%, could be considered as a very worrying sign for the Australian economy in the long run, which is predominantly dependent on Chinese demand for their exports. As such, should the economic situation deteriorate in China, we may see the Aussie weakening, with the worries regarding Country Garden, another Chinese construction conglomerate, also weighing on the Aussie. Lastly, we highlight to the release of the wage price index rate for Q2 on Tuesday and employment data for July on Thursday, which may provide some indication for the traders in regards to the tightness of the Australian labour market. The loonie appears to be ending the week in the reds against the dollar. On a fundamental level, we note the string of deteriorating relationships between China and major economies may have also spread to Canada, with the Canadian government claiming that China has targeted one of its lawmakers in a disinformation campaign, potentially straining the relationship between the two countries. On another note, we note that oil bulls appear to be in control of the commodity, with the liquid gold appearing to be moving in an upwards trajectory, and if it continues to rise in the coming week, we may see the CAD getting some support. On a macroeconomic level, we note that Canada's trade balance figure, which was released on Tuesday, seemed to paint a different picture, with the deficit widening instead of narrowing as expected, thus potentially indicating that as a whole, the Canadian economy may be suffering some setbacks. Therefore, traders may be looking to next week's BOC CPI rates for July, which are due to be released on Tuesday, Canada's wholesale trade rate for June, and lastly on Friday, Canada's producer prices rate for July. In the coming week, we expect volatility in the FX market to ease, given the traditional holiday month for European and North American traders as we enter the middle of August. Yet some financial releases could potentially have an impact on certain markets. We also note that the earnings season in the US appears to be slowing down, as most high-profile companies have already released their earnings reports. Nonetheless, we would note Super League Gaming on Monday, Home Depot on Tuesday, JD.com and Cisco Systems on Wednesday, and Walmart on Thursday are expected to release their earnings. As for gold's price, we note its decline over the week as the US dollar remained at high levels, as did US yields. But the BRICS summit is due next Tuesday, with RT having claimed that the group could be discussing a common currency backed by gold. In the event that the discussion is made on returning to the gold standard, we may see substantial volatility in the gold markets. On a more fundamental level, we note that the continued uncertainty about the viability of shipping routes via the Black Sea created by the war in Ukraine tends to remain present and appears to be still influencing the commodities markets. We hope that you find this report useful, and from all of us here at IronFX, best wishes for solid trading.
Hello everyone, my name is Emily and welcome to another video. Today we're going to talk about automated trading systems. Automated trading systems, also referred to as algorithm trading, involves the use of an algorithm to execute trades according to the predetermined criteria. The systems allow traders to establish specific rules for both trade entries and exits. Once these are programmed, they can be automatically executed by a computer. The benefits of automated trading include more trading uptime, minimizing the impact of emotions during the trading process, and faster execution. To get started with automated trading systems, you need to decide whether you want to build your own system or use a third-party algorithm. If you build your own system, you can choose every aspect of the strategy and have a better understanding of how the system works. It could open and close trades based on timing or price, using technical indicators to confirm your entry and exit points. For example, you could build a system to automatically buy 100 Netflix shares when its 50-day moving average goes above the 200-day average. Or you can automatically sell 100 Netflix shares if the market reaches volatility levels you are not happy with. If you are not confident enough to build your own system, you can use a third-party solution instead. This works in a similar way to a self-built system, opening and closing trades according to set criteria. However, you will have less control over the customization of these parameters. Whether you build your own automated system or use one which has been pre-built, it's important to backtest it thoroughly to make sure it works in the way you want before you put it to work on the live markets. MT4 is popular if you want a third-party solution because MT4 provides a marketplace where you can conveniently access pre-built algorithms to get started with automated trading. It's important to note, though, that automated trading systems have some downfalls that you should be aware of, like the possibility of mechanical failures. For instance, if an internet connection is lost, an order might not be sent to the market. Automated trading systems need to be monitored because of the potential for technology failures, such as connectivity issues, power losses, or computer crashes. Automated trading system can experience anomalies which could result in wrong orders, missing orders, or duplicate orders. If the system is monitored, then situations like this can be identified and resolved quickly. Thank you so much for watching us today, guys. Bye-bye.
Okay, so today webinar I'm going to talk about multiple moving average strategies. Okay, but before I go to the presentation, just want to highlight some of you might be interested in our VIP room. So what you can do, you can just register. Okay, and then there is minimum deposit. You can see bronze 250, 1,000 or 2,000. So it depends on the tier, and then you will get to access to our VIP room. Okay, so how it look like? It's gonna be something like this. Okay, let's say if you have any question, you want to like talk with me and with the team. Okay, let's just talk about goal like okay, let me click and show. For example, you want to find, let's see the entry, or you want to find a support and resistance, right? Actually, you can draw something like this. Okay, and maybe some of, for example, I draw Fibo, for example, and then you just might say like okay, like at maybe I just put like Desmond first. For example, let's say, hey, Desmond, can you help? Oh, okay, can you help me to check my let's just say support and resistance level, just something like that. Anything you want to ask me and the team. Okay, and maybe you just highlight here. Okay, and then you just link object, and then you click somewhere here, and then you just confirm. So when you send in to me, okay, I will get the chance to highlight, and then to see like which level are you talking about. And also our VIP service, we do send kind of trading idea. If me and the team we find some good setup, we will send to the VIP room as well. Okay, so it's something like this. Okay, just if you already have the account, and then you already have deposits at least 250. Okay, and you can just maybe let the IronFX know, and then you can join our VIP room. Okay. Okay. All right. Just let's start webinar today. Like I say, today topic is gonna be multiple moving average strategies. So again, disclaimer: the information in this webinar should not be considered investment advice or any investment recommendation, but instead just educational material only. Okay, if you want to do the own trading, just do it diligently. All right. Okay, so it's about myself. My name is Peggy. I'm a trade analyst and a prop trader. At what is it? Can you see me? Okay. At the Every Fortune Group. Okay, so I do trade a prop trader trading as well. Okay. So today agenda. Why is that clicking? Movie? Why? Sorry. So today agenda, I'm going to talk about what is multiple moving average strategies, how do you use it, and how you can improve on it. Okay. So today strategy I'm going to talk about is the GoP multiple moving average strategy. Short form is GMMA, is Daryl Goofy. Okay, so he's an Australian guy. He is the one who created this technical indicator. Is quite simple to use. If you want to find like support and resistance or crossover, how to get the entry, buy and sell. Okay, which is I will going to talk a little bit later. Okay, so just a little bit about GMMA. They are using moving exponential moving average, which is EMA. Okay, so sorry why it's not moving. Okay, so there are two type of moving average. So in the screen you can see that the green line is a short term and the red line is a long term moving average. Okay, so sorry guys, why I cannot see. Okay. Okay, so the GMMA, they are using two different EMA, in the offer to analyze the market behavior on multiple like multiple EMA. Okay, so how do you use it? Okay, how do you use it? Ish. Okay, you can setting on trading view if you are use trading view, or you use MT4 MT5, but I think these are indicator you can find at in trading view. So the short term EMA typically set at 3, 5, 8, 10, 12 and 15 day period EMA, and the long term EMA, which is the red line, typically set at 30, 35, 40, 45, 50 and 60 day moving averages. Okay, so you can see that. Okay, and the GMMA track the activity of the two major group in the market. So those are investor and trader. Okay. Oh, okay. So like I say, two group of the major group in the market, which is a trader, is a short term. It's gonna be a green color line, and the investor, which is a long term, is a red line. Okay. 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 So the trader they are think about short term. That's why we use 3, 5, 8, 10, 12, and 15 day moving averages to identify um the entry. Okay, so they're using the green line, and we track okay, we do track investor. We are using 30, 35, 40, 45, 50, and 60-day EMA because the investor they think a long term trend. Okay, let me try to move it. Sorry guys, I don't know why my presentation like another screen is not moving. Yeah. Okay, like say the investor, that take more time to recognize the change in trend, so we track the with investor activity by using those EMA. Okay. uh and how you find the trend for this indicator, you can use to find the finding trend here. For the investor long-term trend, which is going to be the red line, and the trader going to be short-term trend, which is the green line here, which is the arrow you can see in the screen. And the trading plan, actually you can, how it so is that we use this strategy to finding agreement on what value between the two group. Okay. 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 So, the trader, the short-term trend, they represent, or who are, attempt to capture the short-term profit. It could be those like scalper who like in and out the market very often, and like I say, the long-term investor who is more to like more to like take time to identify the trend, so they tend to hold the position longer than a trader or like scalper. Okay. Also you can use the GMMA to find a strong trading opportunity. So how you so is that as you can see here in the screen, okay, let me see. Okay, like how you identify that the relationship between the two groups tell the traders about the trend of the market, a change in price direction that is well supported by both short-term and long-term investor. You can see that the investor signal is very strong trading opportunity. So for a GMMA, is a easy indicator, I know, for you to use because it allows everyone to determine the overall trend. So you can see that it's very clear direction if you use this indicator. So you can identify, you can see red and green. It represent trader and investor very clearly. And also it also help you to easily identify on or trend. You can see that the red line is a long-term trend. Okay, it really slope down, and the green one, okay, is a short term. It's a like trader. You can see that it's like pull back to the long-term trend, which is red line. Okay, like I said, the copy indicator is very easy indicator, like that like help your body to determine on the trend quickly, and like without any personal bias bias, right? And of course, you have to know that how to use it correctly as well. Not only like, oh, you see that, or when the green line crossing the red line, and then you just want to make a short or make a sell order. Okay. Again, here I will show you how to get the easy identify the overall trend. Okay. The GM. Oh, sorry. Why that's okay. Okay. So the GMM also offer the insight into potential or the period that could be consolidation by the signal, or it could be the direction of the market. And you can see that the highlight here or in the square that I put on the screen, the reversal, you can see that when the short term close below the long term, which is the red line, you can see that there is going to have reversal soon. And you can see that after it's closing, it's go to the bearish direction, right? The green line close below the red line. Okay. And you also can identify the consolidation here. It's a ranging market, right? When the two group of the GMMA is kind of like close each other, like here ranging market, you can see that how to identify trend. So I think this indicator is very good, personally very good for identify the trend if you know how to use it. Okay. And also I find this indicator is 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 quite good if you know how to um combine with the price action or another indicator, which is I will talk about it later. Okay. Okay. Yeah, just I will mention price action as well, right? You can use this this indicator combined with the price action or Ichimoku crowd. Okay, I will show it you guys later. And how you can implement or how you can read the GMMA is here. Okay, I show you the real chart. Not moving here. Okay, so the degree of separation, you can see that when the short term moving average is a green line, it's close above and is far away from the red line, which means that there is very strong trend. Okay, you can see that. And then when there is a narrow separation or the crossover, it's going to like have really trend is weak, or it's going to have like change in trend as well. You can see that. Okay, on my left, let me see if I can use my pen here. Okay, all right, you can see that here. So when a narrow separation or crossover, so it's come from the over here, go to uptrend, right? And from here it's crossed over. So it's a trend direction going to downtrend here. Okay, so you can use this indicator, like I say, identify trend. The green line cross above the red line is going to go to bullish. If the green line cross below the red line, it's going to bearish trend. Okay. Okay. Sorry guys, why I cannot move the slide here to okay. Why is that move over here? I'm not so sure why. Okay. Okay. So from here, I just mentioned the crossover. So the crossover of the short term and long term, which is over here, right? The bullish, which is say the crossover here, the green line cross above, it represent the trend reversal. So from bearish, it's going to bullish reversal. So it's go up, and bearish reversal. You can see that the short term close below the long term, which is green, cross below the red line. It's going to bearish reversal trend. Okay. So how is the rangings look like? Okay, it's over here. So if the line is very heavily intersected, is meaning that it's lack of price trend. You can see that when it's ranging or consolidates over here, so it's not a good time for you to trade in the trend direction. You might have to wait for the price to like a big breakout of this box first. Like you can see here, if a price to break out or close below, and then you can make a short from here. Okay, so it's very, like I say again, if you want to use the indicator, you can just go to trading view and then search for GMMA, and then you can try to use this indicator to identify your trend, the market trend. Okay, so how is the long, or you want to buy the position? Like I say again, in here in the screen, you can see that the green here short term is cross above the red line. So it's over here, if you combine with the price action, you can see that this is one of the price action here. Okay, and then there is really big bullish candle over here, and then it's close above somewhere here. So when it's cross above here, you can just place the buy order over here. Okay, because here it's going to already cross over, and after that you place the buy order here, so you can just put the stop loss over here. Okay, and then you can see that the price is bullish. Okay, and what about the short or sell example? Again, bearish trend. So when you see that the price or the green line is close below the red line, which is the short-term close below the long-term trend. Okay, and you can see that this is a very big bearish candle. Okay, so when it's close below, you can just put the sell order over here, and then you can put the stop loss, or you can put at the high here. All right, and then you can see that the price is going down, and then even those like go up and then retrace or pull back at the support area. Okay, and then it's continue going down. All right, like again, if you want to put the short or the long, you can put as long as like the price is not go beyond the long term. Okay, it could be go up here and touch it, and then you can make another sell order here. Okay, and just make it down, but cannot go above the long-term trend. Okay, if you want to put the sale order, right? And again, like I mentioned, that is very a strong trend over here, because you can see that the separation between these two is really widen. So this very strong trend. Okay, short. Okay. Okay. Back out. I just mentioned. Okay. Back out from console relation here again. The separation is very widen here. A very strong trend, and then you wait for the breakout just now, right? The green line cross below the red line, okay, and then I you say it's really strong downtrend. Again, you place the sell order here, stop loss here, and then you can see the price is go to downtrend. So I think this is one of the indicator for me personally to use for identify the trend. Okay. Okay. Okay, I have another example of the like long or buy position. For example, here, let's say you already enter the order like the buy order over here, right? Because you saw that there is a crossover at this area, okay, and then you can see that you want to add more position, okay, you have to identify or find that there is no crossover during the trend. There is no crossover, right? And then when you see the price is going until here, okay, and then you see that the price is pull back to EMA short period EMA over here, and then you can put the buy order more if you manage your lot size very properly, or if you are not over trade, you can put more buy order over here, okay, and you can see that the price is react to short term moving averages here, okay. So this how you want to add more to like buy position. You can see that, right? So when the price it touch or react to long term over here, you may exit the trade because there is potential for price. Okay, from here you can see the price is changing already. So if you see like that, you might have to exit the trade. Okay, just close the trade and then exit, and then you come out of the market and see again where you can find the opportunity to enter the trade. Okay, for the short term, okay, for the short term you can no, let me see. Like wait, sorry, why is like that? Back out. Okay, for the sorry guys. Okay, for the chart example here, again, you see that price really close or below the long-term trend. Okay, and then you have a chart over here, and you can see that the price is a pullback. Okay, here pullback. You can add another order here, go down. Okay, pull back. You can add another like sell order over here. Okay, you can see that here, pull back. You can then you make another order over here. Okay, as long as the price is not go beyond the long-term trend, which is the red line, then you can add sell position if you manage your lot size properly. Okay. Okay, so there's a tip for for you guys how to use the GMMA is that when is the like how you determine the really strong trend, which is the distance between the red and the green moving averages here, okay, which is a circle over here. Okay, this is like I mentioned, it's very have a strong trend direction. So this is gonna be downtrend. You can see that, right? And then the separation is wider from each other, is far away from each other. And one thing is that GMMA is, let me see, is act as support and resistance. Okay, so how it works that you can see that when the price, maybe make is the example over here. So you make a sale, right? And then you see that price is coming down, and then it's reverse. You can see that this is act as a resistance, acts as resistance here. Okay, so this is one of another, they act as upon resistance. What is about the support here? You can see that price on uptrend, it pull back to the long-term trend. Okay, this act as support, and then it's pull back, resistance, and then this one pull back to resistance again. Okay, it's act as support. Okay, this is also act as support level. Okay, so you can use it to add more position or exit your trade as well. Okay. Okay, so how you can improve it, right? I mentioned that you can combine with price action or Ichimoku crowd if you know how to use it. Let's say in the screen you filter out, you use like just want to get a confirmation that is this going to the correct trend direction. So you pull out the GMMA, right here. Okay, and then you see that there is a crossover here. So it's going to change direction to the bearish reversal, right here. And then you can see that short-term cross below the long-term, which is green cross below the red line. Okay, and then you can see that price going down, and then you also can see that price also below Ichimoku crowd here, meaning that price is on downtrend. Okay, so you can use these two indicators to this to find the trend direction, or like to help you to get a confirmation or confluence. Okay, so these two, you can use this to identify the trend. And then another one I'm using, you also can use like price action. For example, let me find the example over here, like price action. Okay, for example, like if you know how to draw like support and resistance, right? You can see from here. Okay, draw here. This one is already overlap resistant, right? So this used to be resistant. Okay, and then it's break above resistant, and then now act at support. Okay, from this level you can see that price is going up and then pull back here to resistance level, which is you make a line here, and then it tested as a short term moving average, and then you can see that there is have a big bullish candle over here. Okay, and then you can, from here, after it's closed here, you can place the buy order over here, and then you can see that the price is keep going up. Okay, this is like one of another indicator you can use it. And again, GMMA is a standalone indicator. So as you know, EMA is lagging indicator. So if you want to wait for the price or to the EMA to cross over, for example, I just go back to this one. Okay, like the price to cross over. I just want to buy the clear. Okay, if you want to wait for the price to cross over right here, it might take quite a long time for them to close, and then you may miss the entry as well. So you use this one, use this indicator combine with maybe your own indicator, or you can combine with Ichimoku crowd together with price action, and then you can get a good entry from there. Okay. All right. So I personally use GMMA just to identify trend. So okay, let me see. All right, guys. Thank you so much for tuning in today and tuning for the webinar today. Okay. Let me know if you have any question. Okay, I will end the webinar soon. I think they have a recorder, right? If you don't understand any part, you can just go back and watch it again. Okay. I'm not sure why it's not moving at all. Okay. Okay. All right, guys. Thank you so much, guys. Thanks for joining. Hope to see you guys again, maybe next section. Okay. Have a good evening, or have a good morning, a good afternoon, wherever you are. All right. Thank you. Bye. Bye.